Good. Okay. So let's start. Today's presentation is going to be the long-awaited TDI. So we're doing an introduction to Traders Dynamic Index. If you guys didn't know what the TDI stands for, that's what it stands for, Traders Dynamic Index. Okay, it's created by a guy named Dean Malone. And we're going to talk about how we're going to use the TDI. So how do I use it? What do we use it for? Number one is to read market expectations. So what you're going to be doing is you can kind of determine price action with it, trend conditions, changes in momentum. Okay, we use it obviously to confirm our entries and sometimes our exits too. We haven't really talked much about that, but I will talk about that today about confirming exits with your TDI. And then also looking for like bullish or bearish divergence, okay, to help us with our trades. So we call it the all-in-one indicator, and it uses the RSI line, okay, which is for some of you that haven't changed your settings, it's a green line, but on my settings that I have on the templates that you guys downloaded, we changed it to a black line because it stands out better and I can see it better that way. But that's the TDI line that we use, the RSI line, which is based on the averages of closed candles, okay, determined by your input settings. Today we were talking about that in the chat just now. The RSI periods that we have set is 21, okay, so what it does is it'll take the averages of the last 21 closed candles, and that's how it draws a line, the RSI line. Okay, if you can do a lower period setting, like you can do a 13 or 14, some people do that, and then you'll get kind of like a quicker, spikier kind of RSI line, but if you do a bigger period, then your lines will be a little bit more smoother and just a little bit more reliable. So that's why we use the 21 setting. Multiple time frame RSI lines used to view multiple trends on the same indicator. What does that mean? Basically, what you can do with the TDI is you have the market baseline, which is that yellow line that goes through the middle of your TDI, and then you have your RSI line, right? So the RSI line is, let's say, the price line of an M15 chart, and then your market baseline will be something like an H4 RSI line. Okay, so you have kind of like a multiple time frame where you have the higher time frame kind of lining up with the lower time frame on your TDI, and that's how you can kind of determine how price is reacting overall in the market, which is why I like the TDI, because it kind of gives a broad view of the market. Okay, so that's one thing. And then the signal line, which is the red line, it gives us an indication of whether when to enter and exit a trade. Okay, market baseline, which we just talked about, the MBL, reaching oversold or overbought conditions lets us know when a reversal might soon happen. So we'll talk about that today also. And the volatility bands, which are the blue bands on the outsides, tells us if there's volume in the market, basically telling us about increasing or decreasing volatility. Okay. All right, so we have, this is what your TDI looks like, right? This is market sentiment as in a nutshell, right? So here you have the RSI, the green line, the current price sentiment. This is the RSI line, right? This line right here. Okay, this is what measures current price sentiment. The red line is kind of like, you think of it as a moving average, okay? Crossovers will give us our confirmations for entries and exits. Okay, the yellow line here is the market baseline. Okay, and you can see it's kind of like a smooth, gradual movement of the market, right? The overall market sentiment. So like you won't get this spiky, up and down movement like the RSI price. You're going to get a big, long, gradual, slow movements, right? And when the market turns, it turns slowly, right? Like it doesn't go up and down real fast. It slowly, gradually turns. And then when it wants to make another turn, it'll turn around slowly, and then you kind of catch the wave along with it. So that's the market sentiment, right? And then the blue lines outside here, the volatility bands measuring increasing and decreasing volatility. So basically, when the bands start to expand, okay, that's when you have increasing volatility in the market, and then when they start to kind of contract and move together, we call that a TDI squeeze. That's when there's lower volatility in the market. Okay, generally what you want to be in the market when the bands are kind of spreading out. You want to be in that trade when it's spreading out, and then RSI is kind of moving out towards the outsides of the bands, and then that's like accelerated volatility in market. You're kind of getting the market to push you through that trade, and that's when you're going to hit your TPs the fastest and things like that. So that's kind of what you want to be in that situation. Okay, so we're going to go through these one by one. I'm just going to kind of characterize all of these for you. So this RSI line, the price line, is what we use to identify positive and negative sentiment. Just like to strip it down to the bare bones. Really, what you're doing is above the 50 line, you're looking at a positive sentiment. Okay, so you're looking for buys above the 50, and then below the negative, below the sentiment line is negative. You're looking for sells, right? So below 50. Okay. Now we also have these lines here, these levels, okay, 68, 50, and 32. On our TDI settings, we have extra ones, right? I have them at 70 and 30, and then I also have them up here in these streams at 80 and 20, okay? So those are what we call overbought and oversold areas, okay? Or we call them buying exhaustion and selling exhaustion. Okay, so what Dean did when he created this thing, he kind of took a study of price over the course of like 20 years or something like that. Okay, and when that course of that study, he found that these levels, okay, are generally where areas are, price tends to turn around, or where price tends to slow down and kind of reverses. So that's why he had these levels put in there. Okay, now after all this time, we've taken it a bit further. We've added more price levels to it, just because sometimes we do get areas of extreme exhaustion on the ends, right? So we use those areas as well. But that's generally what we look for when we're looking for overbought and oversold. We're looking for areas above the 68 and then below the 32. Okay, and in terms of like looking for points of reversal. Okay, so here is the red signal line. This is what we use to identify our entries and exits. Okay, so if this is your price, your RSI line, this cross is what we look for. It's one of our confirmations, right, on the TDI. We look for our RSI crossing the signal line to give us an entry for a buy like this, or a crossing down like this to give us an entry for a sell. Okay, so if you think about this, for entries and for exits, we don't talk about this, but you can use the RSI signal line or the TDI signal line as an indication for an exit of a trade. So if you take this sell here on the cross of this signal line, once it gets down here, okay, you can see that RSI crosses back over. This could be an indication for you to get out of the trade, okay, because it's reversing. So price kind of comes down here and it kind of stutters, right? Pulls back a little bit, comes down here, pulls back a little bit. On the chart, you might see candles pulling back and you might get scared. That this is reversing on you, but you can see here it holds this line. This is like when we're using the 13 EMA trail for our trade management. It's the same exact idea. You're just using the RSI and the signal line to do the same thing. So you can see it bounces off of the signal line, it holds it, and you can continue holding the trade. And then once it crosses at this point, you can use that to exit the trade, right? So you're ever in a trade where you're like, oh man, I wish I held it longer, right? This is one of the ways you can do that, right? You can you don't have to get out here. Once it crosses, then you can look to get out, right? So that's one of the ways you can use it as entries and exits. Okay, next is the market baseline. So this yellow line, right? So we said just before that it is a gradually moving, market sentiment. It's like it moves really slow, very nice wide turns like this, right? If it wants to move, it moves slowly. So you have to imagine like you have the whole momentum of the market behind this, right? Moving down the course of this. So if it wants to turn, it turns gradually. It's not going to go like right away and give you a reversal. But when it starts to turn, you see the market shift and the momentum shift, and then you move along with it. So if I were to kind of give you an analogy, like RSI line would be something like a speedboat, or maybe like a wave runner or something like that, right? Like a jet ski. And that can go up and down and really fast in these kind of squiggly lines. But then you want to think of like the market baseline as like a cruise ship, right, or something like an ocean liner. So when it's moving down the road, right, it's like moving price is kind of moving along with it. The best trades are when the market baseline and the RSI are moving together. That's why when we use our confirmations, we want the RSI line to cross the signal line and then cross the market baseline. That way it's moving in unison with the market baseline. Okay, so you can see here, this is moving together with the market baseline. Market baseline is pointing down. This is also pointing down. And then when price gets up here, okay, this might be a point of reversal, okay, but you notice that when I said that the market turns, it turns gradually, right? It might not give you a reversal like this right away, right? Because the higher time frames are king, right? The higher time frame might not be ready to move yet, but the lower time frames are showing you a reversal, right? But the higher time frame will always trump the lower time frame, right? It's kind of like this guy right here trying to move this big guy. It's not going to happen, right? This is the lower time frame. This is the higher time frame. If he doesn't want to move yet, he's not going to move, right? So that's what this is right here. So sometimes you get a market bounce, right? This bounce off here at the market baseline, and then the trend will continue. And then it isn't until you get to around here where the RSI line crosses and does the actual cross, and now, okay, now the market baseline is ready to turn and then move up, and that's where you get your uptrend. Okay, so you got to watch those, subtle nuances of the market sentiment. All right. Also, we also mentioned that when the market baseline gets to these points, these levels up here of exhaustion, and seller exhaustion or buyer exhaustion, this is where you can likely expect to see the market kind of turn around on you. Okay, so you can identify market reversals watching the market baseline reach those levels. Okay, so like above the 68 or above the 70 or below the 32. It takes a while for that to happen, and it's obviously more reliable when you see it happening on like an H1 or H4 rather than an M15. So when you see those happening on the H4 and or the H1, and then you're also seeing divergence with that, and then like you're getting your M's and your W's and your patterns in like extreme level 3 conditions, that's when you're going to see those big market reversals and catch those big pips. Okay, so that is market baseline. Volatility bands, the blue bands, like I said, identifying increasing and decreasing volatility. So whenever the bands start to kind of move away from each other, that's a sign of market volatility increasing. Okay, so if you were to take this signal here, crossing the market baseline and the signal line, this entry would be accelerated when it pushes through these bands here, and now it's hugging the top of the bands. Now you see the bands are widening. Right? On the charts, you would see the price just kind of shoot up from here, right? And those are the best ones, right? You can get your TP hit in like 2 or 3 candles, and you just enter the trade, and then boom, you get your TP hit, no drawdown whatsoever. Usually you'll see this kind of behavior with the volatility bands, okay? And then once it comes to back in and curls in, you can see it starts to narrow. This is a decreasing volatility, and that's also a sign for you to kind of exit the trade at that point. All right, so we're going to go over really quickly, once again, our TDI confirmation rules, what we use to look for when we enter our trades. Okay, so the yellow line is our market baseline. We have our red signal line, and then we have our RSI line, okay, which is green here, but it's black on our charts. So what you want to see for a short trade, the correct TDI confirmation is you want to see this kind of structure, okay, the market baseline on top, the signal line second, and then underneath the market baseline, and then the RSI line last, right? So you want to see a cross of the RSI signal line below the market baseline, below the signal line, okay? And notice the angle and the separation, okay? So you get a little bit of separation here. As the trade progresses and price moves, you see these start to move farther apart, and that's really when the market starts picking up and your trade starts going the right way, okay? Same thing conversely on the buy side. What you want to see is you want to see the market baseline on the bottom, signal line second, and then RSI line on top, crossing over this signal line like that, and then the angle of separation starts to spread these 3 things apart when the trade moves away. Okay, so that's for a long trade. All right. You also want to look for divergence. Okay, so when you're looking for divergence, this is what you want to see. Okay, so on the chart, you see the candles are making what it looks like a lower low, right? It's kind of sloping downwards here. But on your TDI, what you're going to see is you're going to see it kind of sloping upward. So you see this is kind of sloping up while this is kind of sloping down. And then you can see right afterwards the candles start to move up, right? And then conversely on the other side, you're going to have bearish divergence where you see them making a higher high with the candles up here, okay? So from here to here is a higher high. But then on the TDI, you're going to see them making lower highs. Okay, so this high to this high is lower, and then in contrast with this, and then you can see the price is kind of starting to reverse and come down. This is our M, right? So that's how you look for divergence. When you look at those things together, along with everything that we've just covered in the TDI, that's how you get a picture of what's going on in the market, okay? So that's what we're going to look for. Look for divergence, right, on your charts, and how to confirm your entries after that. Okay, so let's look at some of the charts. So we're going to look at some examples of that right now. So on this chart here, this is just a M off the Mayo example, okay, with the TDI. By now, you guys should know how to confirm with your TDI, you know, what our entry confirmations are. But we're going to go over it just, you know, just for the sake of going over it for you guys today in this presentation. So you can see here, this is your M, okay, off the Mayo, your first leg here, second leg railroad tracks. Okay, but we can't take this entry until the market baseline is crossed and also crossing the signal line, right? So when we see our RSI crossing the signal line and crossing below the market baseline, that happens on this shift candle right here. Okay, you can take an aggressive entry on this railroad track, right? Because we do have a second leg nameable pattern, but just know that it's this. The confirmed safer entry is, of course, waiting for this RSI line to cross the market baseline. Okay, so if you took that entry right there and the close of that candle. Okay, you got RSI crossing the signal line, crossing the market baseline, TDI confirmation. This was a 45 pip trade on UCAD. Sorry about that. Wow. I'm pretty sure I have my phone on mute. Sorry about that. Okay, so that's our I'm off the Mayo with the TDI. Okay, and next we're going to look at EA. So what this is we have a W pattern, okay, with TDI divergence. Okay, you can see here our Asian box. Okay, we have 1, 2, and then 3 hits to the low. Okay, with a W pattern right outside of the Asian range. You can see this visible stop on right here with the pins coming down out of the second leg. Okay, we have a confirmed W that closed back above, confirmed first leg, closed below, and then closed back above again. This is our second leg confirmation. We have a 13 cross right here. A candle closed above the 13 EMA. All right. We have divergence here on the sloping downwards on the candles, but sloping upwards on the TDI. Okay. So our entry candle will be right here on the close of this 13. And then we also have a TDI confirmation, obviously, with the RSI crossing the signal line already well above the market baseline. A nice angle of separation you can see here. Okay, you can see the volatility bands slowly branching out, widening, and you can see the fast candles popping up from that. Okay, that's how you know you're getting in the right behind the momentum of the market. And there's your TDI confirmed, and then this would be a 45 pip trade. Okay, up to the top here. All right. So you see that the widening of the bands gives you volatility, but then once it starts to close in, right, then you can see the candle starting to slow down here, and then this is where our consolidation happens, right? So this is probably where you're looking to exit the trade, end of New York consolidation, right? If you hadn't exited already or hit your TP by that point, right? Okay. So we're going to give you some examples of how to use the signal line to exit your trade. So if you take a look at this, we have this is our Asian session here, and we have an M, type 2 M, or possibly type 3. It does look like it could be a type 3 from the 50% of the Asian range, but we do have a poke above up here, so closer to a type 2 example. But we have a type 2 M here, and then right here would be your entry candle. You have a shift down below 13 EMA, close candle above, or sorry, below 13 EMA. So that would be your entry right there. And then this candle right here, if you take a look at this RSI signal line, is crossing the signal line right there. Okay, so maybe even one candle before that, you could see the RSI line crossing, but right here you definitely can see that this signal line has been crossed. So when we use the 13 EMA trail, you probably would get out here, right? This is where it closes above 13. You would get out of that trade right here. But using the TDI to confirm your exit, you can get out just slightly a bit earlier, right? And you can avoid this, all of this, and still save just a little bit more pips, okay? And then let's say you took it back down, right, the other way. You see this out of the band in the band kind of activity right here, and then this is our M structure. This candle right here, you take this entry because it is below the market baseline and crossing below the signal line. So if you take this entry here, take this all the way down to the bottom here, you can see this candle, this bullish candle up here is where the RSI signal line cross. Okay, you can exit your trade there, even though it hasn't crossed the 13 yet, but it's likely this will come back up and reverse for New York reversal and kind of consolidate in the range. So you save yourself some pips as well. All right, we don't really talk about this this method, but maybe if you wanted to use it in conjunction with the 13 EMA trail or the Fibonacci trail, whatever one you feel comfortable with. But there's 3 different ways you can manage your trade, and it doesn't matter which one you use really, as long as you use one of them. Any of them, whatever you like most. Okay. Sometimes this works better. Sometimes the 13 EMA trail works better. Sometimes the fib works better. It's just a matter of testing and experimenting with them. Okay. All right. Next. So here, what we have is out of the band, in the band, right? I love these. So when you see these on the charts, especially at, like I said, at the extremes, at level 3 reversal areas, they work out beautifully. So take a look at this right here. We have our M, okay? We have 4 hits to the high, really, off the blue tracer, okay? You see that, how they take out, almost take out the high, but never quite do it, all right? Notice the divergence on the TDI, okay? We have a flat line basically going straight across here. But on the TDI, you can see it sloping steadily downwards, okay? Shark fin out of the band, although a very small one, it is out of the band though right here, okay? And then second leg in the band, it happened to be 4 legs, okay? Didn't actually cross the market baseline until it gets down here on this candle, okay? But this is a shift below the 13 that gave you your entry confirmation, okay? So your candle entry would be here, all right? And RSI crossing the signal line below the market baseline. TDI confirmation is right there. And if you were to take that trade, you would have got 35 pips. Now this is AU, right? So the ADR range this is the lower ADR range pair. So this might look like a big, drop, but really on AU it's only 35 pips. It's a little bit deceiving. Okay, so also here. Okay, look at this W, right? This is an advanced W. This is out of London. Now we're going into New York session, so we're looking at the New York reversal, right? This is an advanced W. We don't get a confirmed W, no close above the 13, but we have very nice, big, fast-moving candles, right? This is the type of W activity we like to see when we get our W patterns, okay? So you can notice here shark fin out of the band right here, first leg, and then shark fin in the band with a second leg right here on this big shift candle. Would be your entry, but you can take the pullback entry and get a discounted stop loss, right? So on a big shift candle like this, it's likely they're going to give you a pullback, right? So we can pull back to about 1/3 of the candle. Sometimes they give you a pullback to the half, but 1/3 is good enough, okay? You can take your entry right here, all right? And if you took that pullback entry up to the top, TDI confirmation, right? Above the market baseline and crossing the signal line right here, well above, nice angle of separation. Entry on that pullback there would give you 30 pips up to the top here, and even more if you held it, right? Because this, you might have exited here, you might not have, you might have held it, but you could have got more. Okay, if we wanted to use the RSI exit right here on this candle, probably would have exited right there. Okay, and then same with this one. This one on this entry here, the RSI exit would be right here on this candle here. So this is close. I mean, it didn't close above the 13, but you maybe even could have got one of these candles. I didn't put the line here and I line it up, so I can't really tell, but it might have been one of these candles. Okay, so here's a fun little drill that we're going to do. Okay, so this is just looking at the TDI. Okay, so I've expanded this chart to look at the TDI. I want you guys just to take a few minutes. Okay, and if you want to screenshot this or whatever you want, you don't have to screenshot it, but just take a minute and look and see how many setups you can potentially see. Like, where would you enter? How many entries do you think you would take if you can notice some things that we talked about today, like the out of the band, in the band things? Um, you know, just take a few minutes, take a look at the chart, see how many entries you would take just looking at the TDI. Okay, I'm going to give you about 2 minutes. I see some people writing 5, 5, only 2 sharpens at extreme, 6, 5, 6 until my eyes went cross-eyed. So we got 11, 6, 7. Okay, so we got, all right, 6 over 12. So we got over 12. Wow. Okay. I'll give you another 30 seconds. Anyone else want to chime in? All right, 3 to 4. Okay, so yeah, so we have 2 at the extremes, right? Someone noticed that there's 1 shark fin at the extreme here, 1 shark fin at the extreme here. You could have taken an entry on those for sure, right? You could have taken 1 here out of the band. You could have taken another 1 here out of the band, and another 1 here out of the band, right? Those are really the only clear ones that I see that you can take. Obviously, you could take some of these inside, but once we, so what I'm going to do now is I'm going to show you the actual chart, and then we'll see what your trades lined up with, okay? And let's see what you looked at. Okay, so this was actually an EA chart on the 15-minute. Okay, so immediately we can see that this was our, shark fin out of the band. Okay, this one gave us kind of like an advanced M, right? And our close actually was right here, I think. Actually, this candle right around here, okay? So down here was where the close was at the end of the session, right? And it kind of gave us not really a whole lot of pips, and then probably got stopped out after that. So see, sometimes it doesn't work out, right? I mean, it did work out. It sort of worked out. You got some pips out of it. It's not like it didn't actually work out. But it wasn't until later in the session here where you get this entry, where you get this monster drop, right? So this kind of was like the catalyst for this drop, right? Even though it didn't work out here, like you already had a notion that this was going to happen, right? Based on this, what you see here. So it might not happen right away, but it's coming. Like when you see this stuff happening on the charts, like you know it's the market is poised for these kinds of moves, okay? So another one that we saw at the extreme here, this one we have kind of a divergence, right? You can see a big divergence here. This is candles are all sloping this way, but then this TDI here is showing a gradual uptrend, right? And the big spike candle here, this was obviously probably a news candle most likely that spiked this, but then you can see right here, that's where it crossed the market baseline and gave you the signal to enter. This would have been a massive shift candle, so your stop loss would have been huge, but if you took it, by some grace, you got a good amount of pips here. This whole box is 95 pips. So about a third of the box here is about 30, 40, 45 pips, something like that to the top of this right here. Okay, and then immediately following that big move, okay, you can see here, right here, another shark fin out of the band, okay, near the TDI extremes. All right, out of the band, in the band, and then this was the shift candle below the 13 that gave you this, probably the next candle over. Okay, probably this one was your entry. And then it kind of gave you a stutter here, but then it did eventually do the big drop, right? So it was like a fake you out, kind of shake you out of the tree type of trade, getting stopping out the people that got the move right, and then continuing down afterwards. And market makers will do that move a lot. Okay. Next was right here, immediately following that. Okay, so we have W out of the band, in the band, kind of like a small out of the band, and then second leg in the band. This is where it crossed the RSI and above the market baseline. So this, oops, right here, this one was an advanced W. And then this was your second leg of the advanced W. So we gave you a second leg. This one kind of stopped you out here. If you took out your 13 cross, this will probably stop you out. And then the second leg right here is where you could have got in again and took it back up for, this whole box was 54. So about 40, 50 pips, something like that. Okay. Next, we have a shark fin at the extreme. Okay, right here. This one, yeah. This one at the extreme did not close. You got an advanced M, right? Did not close below the 13 to give you first leg. So this really constitutes this first leg for me, but this was an advanced M. So right here on this shift candle close, it doesn't look like that was the candle that gave us, it probably was one of these candles, right? So this candle close here, if you took that, you might, you got a little bit of pippage, but then you got stopped out here. This is where it started to turn over afterwards. Okay, so you'll see that sometimes that you'll get the conditions and they'll be right, but then they won't work out, right? So that's why we have our stop losses. That's why we manage our trades. You can see that when the RSI crosses the signal line up, that's when you can exit the trade, right? And we don't have to wait for this candle. This cross right here, you can exit right here on these little pins here, right? So you can get out of the trade and avoid this mess. Okay. All right. Let's do one more time. Another one. Okay. So right here, take a couple minutes and see how many entries you can get. Yeah, bonus points if you can guess the pair. If you can guess the pair, that's you'll be surprised when you see what pair this is. Okay, let's see what people are saying here. Did I miss one last try? Okay, we can go back to it later. Let's see here. 5, 10, 5 clear ones, 8 or 9, 15. Wow. All right, some people saying GJ, EU, EF, Mexican peso. No, I don't show. I wouldn't show you a Mexican peso chart. All right, a lot of people saying GJ. Okay. All right, so let's count what we got here. We got one extreme here, right, out of the band, in the band. That could be an entry. This is kind of a tiny one, not really anything. This is not really anything. This doesn't qualify. This one could be here. Shark fin out of the band, in the band. That's 2. 1 here. That's 3. 1 here. That's 4, 5, 6. Right? So that's, I mean, some of you got more. That's okay. Let's look at the chart. So the reveal. It was gold. All right, so this actually gave us so many good opportunities these past couple weeks, and we haven't really been looking at it. But you can see right here at the top, okay, this one was kind of like a reverse out of the band in the band, right? So it gave us in the band first and then out of the band, and then it gave us a big drop. Okay, so this one came straight down. Then the next one here was out of the band here. Okay, and then in the band with some divergence. Okay, it gave us a little bit of a move up. This is a 1 hour chart though, so these are actually lots of pips. These are huge moves. Okay, so this one right here gave us huge divergence. You see this peak here and this peak here is almost level. Well, not really almost level, but from here to here the distance is much bigger. So this candle here that closed above this 13 that's the candle that gave you your confirmation, and this was a huge move upward. Okay, next we didn't really get anything here. This wasn't really a pattern. Up here was the next one. Okay, so this out of the band, in the band, confirmation candle was right somewhere around here. This one probably. Okay, yeah. So that was the one that closed below the RSI signal line and below the market baseline. So that was your big M there, big M structure off the Mayo. Okay, dropped all the way down. You can see off the M off the Mayo after that leads into what, an ID 50, right? So this is a 1350 cross. First pull back to the water, and then boom, there's your ID 50 move right after that. Okay, so it was like over and over again. This pair just gave us M off the Mayo, ID 50, M off the Mayo, ID 50, M off the Mayo, ID 50. You see that? It just gone all the way down this whole, you know, and just gave us pip after pip after pip. So next one here, M off the Mayo right here, right? Shark fin out of the band, in the band. Okay, this was the confirmation shift candle right there. And then if you held that all the way down, that was a huge, massive move. Okay, this almost gave us an M off the Mayo, didn't really, but still was an M. Very nice M structure at the end of the last week, and kind of completed the multi-session M on Monday, and then gave us a nice big drop to end to start the session rather. Okay. Okay, next one. This is an H4 chart, FYI. Yeah, if you can catch a move like this on an H4 chart, you're going to get some massive, massive pips. You know, also you're going to have bigger stop losses really, and you're going to be waiting a long time for these to play out. So you know, there's obviously pros and cons to these setups. 0 on trade H4. Okay, Angela sees 3. All right, 6, 8, 1, 3, 7. Any more? Yeah, definitely a bunch of 30 pip trades for sure. So let's see, we can start with this one over here on the side here. So we got 1 out of the band in the band, okay? Then another one we have here, that's 2. This one is a bit extreme, so I don't know, we can probably count this one. We'll see what it looks like on the chart, but this might be one here, so that's 3. Then this is kind of, it didn't really give you a you know, divergent one up here, but this could be an out of the band in the band here. This one I don't think I would count. This is a possibility right here, and then this is a big V spike, so I don't know if that would qualify, but this is one out of the band in the band. We'll see on the chart in a second. And then after that, there's one here too, and then one right at the end. Okay, so those are the ones on the H4. On the H4 charts, I mean, when you see these play out, this is GA, by the way. Okay, so GA is also one of those pairs that can give you massive pips, and they can just go forever. This right here, just alone. Okay, so first of all, if you saw this one, this was the most obvious one, right? The W out of the band, shark fin out of the band, in the band. Right here on this candle close was your entry, okay? And if you were fortunate enough to catch this from here to here, I believe I measured it out, it was around 700 or 800 pips to the top. But you were also holding it for 2 weeks. So that's the trade-off, right? So you catch one of these here. Your stop loss, this was like a 90 pip stop loss or something like that. But 90 pips to catch 800 is not so bad, right? So that was one there. We said this was a possibility, but not really, because like once you see this type of, it was kind of a big spike, right? This was out of band in the band, so this was an advanced M. It didn't work out, right? You can see it just kind of kept going, but it was at the extreme and it was ready to roll over. It just didn't know when that was going to happen. But there's a really big divergence going on from here, this point to this point, right? That's a really big looking divergence. So it did finally roll over here and give you the big drop on this one. This was like a 200 or 300 pip drop, right? The next one that we saw was here. I think was here. This one. Gave us a little bit out of the band here, but then it never really gave us another M, right? Until we got a multi-session, multi-week M over here, and then that's where it gave us the big drop. Okay, so here. And this was like a little advanced M also on the second leg. So a little advanced M, cross, and then cross the market baseline here. And then that was your drop into this V spike. All right. Next one was here, a little bit of a poke out of the band, in the band. All right. Triple top, and then a big shift down. This might have been news, or this might have been something, it's hard to tell sometimes with the H4, because when you get big candles like this, not really sure if it's a news move or if it was just that one of those days that it just kind of took off and never came back. So this shift here, if you got in here and you took this all the way down, I mean, this was just massive. I didn't really measure this out, but I don't know if you would have been able to hold through this also. For the people that are swing traders, maybe they could have, but I know for myself, I never would have been able to hold through this, especially through this pullback. Once it was like, back up here, maybe I could have held for a week down here because it held the 13, but once it was up here, I would have been out. So H4, the point of this exercise really was just to show you that, these patterns happen on all time frames. Okay, you can find them basically on any chart, any time frame, any pair. If you just went through and back tested and did the out of the band in the band thing, you'd be surprised at how many pips you can make just from catching those setups. So maybe some people might want to try and do that and test a pair or something like that and just try to look for out of the band in the band stuff. But that'll be fun, right? Okay, so that's going to do it for today's TDI. I'm going to do probably some more examples on Sunday and Sunday's webinar, because I want to also talk about how to read the TDI and when you're in a trade or looking at the H1 versus the M15, how you can confirm your directions and also know whether or not to get into a trade or not. Because sometimes when I'm in the live sessions, I talk about why the H1 doesn't look good to me, or why the M15 doesn't look good to me, and why I don't take a trade, or why I would get into a trade. I want to get a little bit more into detail into that next week, but it was just too much stuff for me to cover today, so I couldn't fit it all in. But hope you guys enjoyed that, and hope that was informative. You guys have any questions on any of this that I covered today? I don't think I see any in the chat, but I'll do a quick scan. Okay, Joshua, do we trade the shark fin, or do we trade on the cross over the market baseline? The shark fin is just the confirmation of the first leg, right? If we get out of the band on shark fin on the first leg, we're still waiting for that second leg to cross in and give us the in the band on the second leg, and then cross the signal line and cross the market baseline. So yes, you're trading, your confirmation is still the same. Your TDI confirmation is always going to be the crossing over the signal line and over the market baseline.
Thank you, Jeff.
You're welcome. Okay, scale-ins with the TDI. Yeah, you can scale in with the TDI. I don't really do that. I'm not really, I haven't really practiced that. So, but there are definitely, ways you can scale in with the TDI. That's more, I think, for, longer term trades though as well. Not so much intraday. I think with intraday trades, you're looking just for your 30 to 50 pips and you're looking to get out. So it's a little bit tougher to scale in with those. But I think with longer term trades, maybe like the H1 and the H4, you could definitely do TDI scale ins. What's that? Hey, Mebs, what's up?
Yeah, but I was gonna say, yesterday we was in the ECAT and the TDI showed that the RSI line was gone way above the volatility band. Is that something that you just covered, or is that something that's a bit more advanced?
Yeah, that's when we saw the TDI, basically the RSI way outside of the volatility band shooting straight up. I knew that the ECAD was going to be a rocket. It was just a matter of time, really. So that's the example of when we see the volatility bands widening. If you go back on that chart, you'll see the volatility band started to widen, and that was where the RSI was kind of hugging the outside of the band. Not really hugging, really. It was just kind of like way outside of it, like straight, like pointing straight up. So those are the best. Like if you can get behind a trade like that, then you'll know that you're in before the momentum hits, and then you just take the ride up. And you saw the results. There was like 160 pips that we could have got on that trade.
It's a shame that I don't hold them trades, do I?
And it held the 13 and never even came close to
No, but that was. And I even said it as well about watching. It's gonna hit that 200 EMA, or I think it was.
Yeah, it went past that even, I think, right?
It blew past that.
Yeah.
But that was that Asian session. I think it went past another 20, 30 pips. So
yeah.
On a full swap and everything.
Yep.
Would have held it, but I mean that's something that I look out for when they're just like that. They're like a gold gem.
Yeah, absolutely. Don't worry, you'll get more of those. There's tons more that we'll catch.
Oh, definitely. I mean, one thing I really learned more from you is the fact that A, being patient, and B, wait for the right setup. Whereas before I was just getting in willy-nilly thinking, it's going to reverse X, Y, Z, and then end up in a big drawdown and start panicking.
Yeah.
So that's one thing I'm grateful and everything. I'm just taking a lot more notes and better way of trading, if that makes sense.
Yeah, absolutely.
I mean, cut your losses, even if it's a 10, 15 p loss. Don't worry, you're going to get one of the trades that is going to hit 160. You've made up for it.
Absolutely. That's really that's the whole method, right? Your losses are going to be tiny, and when you get paid, and the losses don't even matter at that point. So
Exactly.
Awesome, man. Good job. I love to see the improvements.
Definitely. I'm not in any more drawdowns on that. I just don't know how EJ is doing, so I haven't checked it yet.
Okay. Okay. Do you expect the live sessions to be a chance to reiterate the concepts as we learn? Yeah, absolutely. I mean, that's what the live sessions are for. Like I do these, these webinar classes, and then in the live sessions, you guys get to see me, kind of put those setups into practice. Like when we get the setups and we see them, I call them out, right? We get ID50s or M off the Mayos or whatever we cover. I'm not going to call out stuff that we haven't covered. So there's lots more setups coming up that I haven't covered that you guys don't know about yet that I will show you guys eventually, and then we'll have more and more and more setups that we can catch. Every week you guys are going to learn more stuff, and hopefully, that's the way I'm structuring this is, I want to kind of gradually feed you all this information, not kind of give you this mountain of stuff that you guys have to memorize, and then just kind of be overwhelmed in the charts, and then you have too much stuff that you have to kind of intake, and then you become a mess, right? So gradually feeding the information as you guys learn, week after week. It's a slow process. I don't expect you guys to learn it in 2 or 3 days, and just take it one step at a time.
Hey Jeff, can you hear me?
Yeah.
This is Josh. So the RSI is the black line, right?
Yeah.
Yeah. Okay, just making sure.
Mm-hmm.
That's it. All right, thanks.
I mean, you can change the color if you want. I just like it just because it stands out on the chart better. So.
All right, cool.
Mm-hmm.
Thank you.
Yep. and the moral fire hose. I mean, Steve is great. He's a great presenter. He goes off on topics and off on tangents, and then he forgets where he is, and then he talks about Diet Coke, and then we're back where we started. So hopefully the way I do it is I just try to simplify as much as I can, break it down into easy parts that you guys can understand and piece together. And if you guys ever have any issues or any questions about it, just come and ask me.
Just hope you don't get jacked up on Diet Coke like him.
No, I'll do the regular Coke. That's fine.
That's even worse.
Okay. All right, guys. Great class today. I'll see you guys in London session tomorrow, and the recording will be up very shortly. All right, guys. Take care. Have a good night.